Hello and welcome to Business Incorporated. I'm Chimezie Obi Iwago. On the show today, Zimbabwe warns of power cuts as dam levels fall and aging plants stutter. Uganda's growth to stay flat at 6.3% next year. Plus, IMF provisionally agrees to 3-year loan deal with Congo Republic. We'll start off with the markets, and market sentiments here on the African continent were kind of mixed between the South African market and Nigerian market. The JSE index was up 1.26% at intraday, while the NSE index was down 0.25%. On the other hand, the market in Egypt closed the week positive on Thursday, up 0.24%. Kenya closed negative on Thursday as well. And most Middle Eastern bourses closed for the week negative on Thursday. The Abu Dhabi index fell 1.39%, declining for the 6th straight session, with Abu Dhabi National Hotels plunging 7.4% and Abu Dhabi Commercial Bank sliding 5%. In Dubai, the index lost 1.48%, with the Emirates' biggest lender, Emirates MBD, dropping 2.5%, while blue-chip developer Emma Properties falling 2.8%. Saudi's index was down 0.48%, with Middle East healthcare plunging 9.6% after it reported an 83% slump in first quarter profit, and its board decided against a dividend payout for 2018. Qatar's index was down 0.95%, with heavyweight stocks Qatar National Bank and Industries Qatar falling 2.4% and 1% each. And in Europe, stocks were higher on Friday morning despite the U.S. hiking duties on $200 billion worth of Chinese products. Well, let's get across to our colleague there at the Frankfurt Stock Exchange, Conrad Bussen, to bring us up to speed with the sentiments out there in the European space. Hello, Conrad. Well, it's now time to say, thank God it's Friday.
Yes, good afternoon, Jimmy. Thank God it's Friday.
All right, U.S. import tariffs on Chinese goods have been increased, but equity markets in Europe have rebounded. Where's the optimism coming from?
You know, Jimmy, first of all, I think it's important to say that from Monday to last night, the German share index and with it, most other European bourses had been down heavily. The German DAX from Monday to last night, nearly 4% of losses. So the upswing today of a bit more of a 0.5% at the moment, that must be put into perspective here. But you're right, some optimism is being expressed here, and traders are explaining to me that this has to do with the mere fact that the two sides, the Americans and the Chinese, are still on speaking terms, that they continue their negotiations, and as long as this is the case, there's hope. Also, there are still many people on the financial markets who believe that eventually both sides will strike a deal, because not striking a deal would be too negative for both of them. And that's important to note. Unlike what the US president keeps repeating, increasing those import tariffs on Chinese goods is negative for the United States as well. Eventually, companies in the US will not be able to absorb those tariffs. They will transfer them onto the American consumers, and this means higher prices for American consumers to pay. And this potentially, of course, will slow down the economy in the United States. And that's, of course, negative not only for China, but also for the US.
Let's look at Uber's IPO. Uber priced its shares at $45. That makes a total valuation of about $82 billion. So is this a successful IPO, since Uber had originally hoped for a much higher valuation?
You're right, Jimmy. Uber itself, or pundits that try to guess the future valuation of Uber in the past, they had dreamed about a valuation of about $100 billion or even more, but this was basically before the IPO of Lyft, Uber's competitor, which happened about 4 weeks ago. And, on the first day of Lyft's trading, the price of this company surged, but since then, Lyft lost more than a quarter of its value at the exchange. And Uber, or better, the investors behind Uber, just didn't want to see this repeated. Let's not forget, some of those investors in Uber so far are pretty conservative. Among them, pension funds from, for example, Russia, China, Malaysia, Singapore, Saudi Arabia. Those investors do not want to see a very strong increase of the share price right after the IPO. They are more interested in a long-term stability of their investment. Also, of course, it has to be said that doesn't make it much easier to predict what the share price of Uber will be doing today on the first trading day in New York and during the next few weeks, months and years. It remains a very risky business model. Uber is selling the story that it will sort of monopolize mobility in the future, with all kinds of services. And, you know, to really make this become a reality, this will face a lot of obstacles and a lot of question marks. So it has to be said, Uber, like any other investment in stocks, remains a risky business.
All right, in another company news, shares in the German steel maker ThyssenKrupp are skyrocketing due to reports that a merger of Thyssen steel business with Tata is being called off. But just wondering why this is positive news for investors.
Well, it is positive news because it sort of changes the whole scenario about ThyssenKrupp. Originally, ThyssenKrupp had planned to merge its steel business with Tata and then transform itself, ThyssenKrupp, the company, into a holding company with, on the one side, the steel business, you know, the newly merged with Tata steel business, and on the other side, the engineering business, the auto parts business, and the elevator maker, you know, the company called ThyssenKrupp Industrials. This holding structure is now put in jeopardy. What the market is now betting on is rather that the most lucrative parts of ThyssenKrupp will be taken out of the company and potentially sold. Because if you take every single part of ThyssenKrupp, and if you summarize this, this is worth much more than ThyssenKrupp combined at the moment. So this is the speculation that has investors got very excited today. The share price is up nearly 20% right now.
All right, Conrad, it's been a wonderful week with you. So thank God it's Friday. Enjoy the rest of the weekend.